Okay, students, I welcome you all to our last session in general economics. Good evening, students. Wish you all a very good evening. Let's start the class, and then as per our plan, the class will go up to 6:30, and then we'll be having social issues scheduled at 6:45. Okay, students. So let me not waste a minute. Okay, let me start the class. Okay. Okay. So investment models in infrastructure. Investment models in infrastructure. Okay. So now we are going to learn about the last topic, which is important to prelims as well as mains. More important to main students because a minimum there will be 10 or 15 mark question coming from our today's class content. Okay. So mains angle. So you will be getting some questions like define PPP or what is meant by PPP. What are the issues we have in PPP? Then write about the reason initiatives taken by the government. Like that question may be asked. Or else, what is PPP? Then recently government has introduced a model called as HAM. Critically analyze the pros and cons of the HAM model. So or else, what is meant by VGF? In what way the VGF will address the existing problems we have in the PPP model? So like the or else, what are the limitations we have in the PPP model? Like that, these are the general areas or general way how the questions will be asked in the examination with respect to this segment. So just by making use of this notes, you can attend minimum a 10 mark or a 12.5. Sometimes there may be two questions. Okay. So like that, so overall idea will be given in this segment. So now directly let me get into the class. We are going to learn about the investment models. We know that investment, what we do in infrastructure is always very huge. With a small lakhs or small with a few crores, we could not start the business. We need crores and crores. So always this role was done by the government in our economy. But after 1991, the role of government got diversified because government started playing more role in social infrastructure, but government started withdrawing its role from the commercial areas. Okay, so here government, after doing disinvestment and taking the money, government started investing in this area. And when the government started doing the investment in these areas, the bigger challenge what the government witnessed is so the capital investments or capital requirement in the road projects or railways projects or building the ports or airports, it was very huge. But the private people, they are not coming forward because if they build any company, they will get some profit. But if they build roads for the country, if they build rails for the country, if they build ports, what is the benefit which they will derive out of the project? So they were hesitant to come for to start doing the investments in those areas, just to convince them economically. Okay, and then and then after addressing all the issues what they encounter, the issues what I mean is because when you plan to build a airport or when you plan to build any road, okay, you have to come across multiple environmental clearances, okay, which could not be done by the private party on his own, because you have to get multiple environmental clearances. So all those areas to support the private people, and then to incentivize them or to attract them, government took the instrument. That instrument we call it as a PPP, which means public and then private, they combinedly they will start the project. So that is how we started the PPP after 1991. Now PPP is a very common concept. We're going to learn about what were the issues we faced in infrastructure financing. Then we'll learn what is meant by PPP model. Then we'll learn who are the stakeholders, because directly I cannot start the PPP class. Okay, who are the stakeholders? PPP means who all are the participants involved in the PPP project. Then what are the different types of PPP model we have? What are the variations within the model? And then, okay, what are the recent initiatives taken by the government? What are the recent changes or the modifications we have done in the existing PPP model? Like that, we are going to learn about all these things. Okay, so now this is the introduction. Now let me get into the class. Okay, so now the first one is PPP in infrastructure. So the first now, okay, I spoke for 2 or 3 minutes. Okay, so it's a mere introduction. Now, PPP in infrastructure. Now, what is PPP? You can just copy the definition of PPP. PPPs are an arrangement between the public entity and then private partner for development of infrastructure or delivery of services. Okay. Copied. Okay. So now you all would have copied. Now, what are the issues we normally face in infrastructure financing? At the heading, issues in infrastructure financing, which may be a particular segment, okay, which may be asked as a particular segment in our mains question. Okay, it may be a part of our mains question. Mains question may be having 2 or 3 parts. So you should have some idea what are the issues we have in infrastructure financing. Point number 1. Okay, here we got 6 or 7 points. I'll elaborate the points one by one, students. First one, we have more legal and procedural formalities or constraints involved, right? The point, I think this point need not be expanded or elaborated because it is self-explanatory in nature. Okay, legal and procedural constraints. Procedure means environmental clearances, legal hurdles. So the complex nature of the project. Okay, that is the point number 1. The bullet itself will convey you the point. Next one. These 2 points can be understood in a combined way. There is more fiscal burden on the shoulders of government because government, okay, cannot itself by itself cannot carry out the huge economic requirements of the country because you have to build the roads, airports, railways in the entire length and breadth of the country, which is a huge requirement. Okay, considering the financial constraint what the government has got, fiscal burden, you know about the fiscal deficit, these things and all. Okay, and then now imagine, okay, now look at the current scenario. Now we have the economic slowdown, we have the pandemic, revenues of the government got hit. Okay, so even the fiscal deficit went nearer to the level of 9%. In this scenario, government will not be could not be able to do larger investments in infrastructure. So usually they got more constrained, but especially during the time of economic slowdown, there will be more funding gap because the revenues what the government generate and then the expenditure what they have planned, there may be a huge gap between the revenues and then between the expenditure. So this is the second and third point you can write. Simple point is the infrastructure projects puts more burden on the shoulders of government, and then during the times of slowdown, there is a huge funding gap on the part of government. There is a mismatch between the receipts and then between expenditure. Okay, so that's second point, third point. Okay, second and third point can be understood in a sorry, students, I think connectivity issue. So okay. In my end, students, okay, so I think there is no issue at your end. Okay, so can you excuse me? Okay, let me start. I think where, okay, so where the voice was proper, okay, where the audio was clear. Helen, please text, okay, or anyone, okay, Soundarya, okay, please text. Anyone, okay, whose video I'm able to see. Clear. Now Chandramohan, fine, it's clear. Yes. So where, okay, can I start with this point, asset liability? Fourth one, asset liability. Yes, fine. Okay. Now, the fourth point, asset liability mismatch. What is the meaning of the point is, for example, if I have got some deposits, if I go to a bank, so what I will do, I will make the deposits in the form of demand deposits. So I'll go and make my deposit in the bank in the form of demand deposit or in the form of a term deposit. Demand deposit means we all know that that is the money what we deposit in a bank, which we may ask at any point of time. Next one is a term deposit. Term deposit, you know that conceptually the maximum deposits which could be allowed by the bank is 10 years. 10 years is the maximum period up to which we can do some fixed deposit in a bank. So the maximum deposit what we do is 10 years. But here we have different, some people they do for 1 week, some people they do for 3 months and 1 year and 2 years and 10 years, like they keep on going. So the concept is the banks are able to mobilize the deposits from the people in the nature of demand deposit and term deposit. From this term deposits, what they mobilize from the people, they have to utilize this money for lending to infrastructure projects. But infrastructure projects, normally you have to lend to the lend to the companies or lend to the borrowers for 20 years or 30 years, which means these are the projects with long period, long gestation period. So here that is a mismatch, because here look at this point. These are our deposits. These deposits are the liabilities of the banks. These are the liabilities which the banks are committed to. So they have got liabilities ranging from very short term to long term. Long term means it is also only maximum 10 years. But here the loan what they are lending, it is the asset portion of the bank. But the assets are actually, the loans are lent for 20 years, 15 years, which means the bank will be able to get the money from the borrower after 15 years in a prolonged period. But when you go and ask the money from the bank has to settle us the money. That's a huge mismatch, that the bank could not be able to give us immediately the money when they have lent the entire portion for infrastructure. Now you could be able to understand the point, which means the liability, the money what they have and the money what they lend is a huge mismatch between the two portions. That is the meaning of the next point, asset liability mismatch of financial institution. Okay, that is the fourth point. Okay, the money what they have and the money what they lend to others, there is a huge mismatch in the nature of money what they have and the money what they lend. With the liabilities what they have, it is very difficult for them to lend to the infrastructure project, because the infrastructure projects are long-term loans, but the deposits are short to medium-term deposits. That is the point. Okay, you can get my point, you can write. So here there is a huge mismatch between the liabilities what the bank have and then the assets what they lend. There is a huge mismatch between the liabilities what they have. Liabilities means in the bracket you can write deposits. Deposits are short term and long, medium term. Huge mismatch between the liabilities what they have or liabilities they mobilize. Liabilities means the funds they mobilize, and the loans what they lend. Loans are long term in nature. Deposits are short to medium term in nature. You can get the crux, you can write, because each and every time, okay, the flow or the word I may change. Okay, so you may be interrupted. So the thing is, the liabilities what they generate or mobilize, or the funds what they generate, and the loans what they provide. There is a huge mismatch. That's all. That's the point. So now next point, students. Now I was telling you that the banks are generating the medium-term funds or short-term funds. With these funds, they could not be able to provide long-term loans to the infrastructure project. Okay, that is a point. But now a question should come on your mind, sir. Okay, let's leave about the bank. We have got insurance companies. We have got pension funds. So when we are depositing our PF, you know that now during the pandemic, now the government has given some relaxation. We can withdraw some money from PF. But the normal scenario, we could not be able to withdraw. Same angle. Insurance, only when the calamity, okay, when the unforeseen circumstance happens, they are giving us back the money. Otherwise, normal scenario, except very few plans, normal plan, they won't give us back the money. Only during the death or during the calamity they are giving. So they have got the long-term funds with them. Then why can't we involve those companies in infrastructure? That is a question which you should think. Okay, for that, what is the problem is, all the insurance companies and then their pension funds, they got some liability. What is a liability? They got some mandatory norm. Okay, what is a mandatory norm is, whatever the funds what they are mobilizing from the clients or from the employees, or pension fund means employees or the policy holders or clients, whatever they mobilize. So the majority portion they have to invest on government securities, government bonds. Okay, in those securities only they have to invest the majority funds, which means even though the economically they are capable to lend to these projects, they are not through regulatory mechanism they are not permitted, because more than 50% of the funds they have to deploy, they have to invest only in the government security. So here we got other problems. So even though the investment obligations of insurance and pension funds is not like that. Okay, even though the nature of funds what they have is supportive in nature, but the obligations what they have, the obligations what they got from the government or from regulatory body prevents them from lending to the infrastructure players or infrastructure projects. Okay, in that way you can write the point. Okay, so insurance and pension funds are quite compatible. Okay, compatible or more adaptable to infrastructure financing, but it is not practically possible because of their investment obligations. All the points are practical points, students. Okay, you can convert them into the statements. Okay, the point is the funds mobilized by insurance and pension funds matches the needs of infrastructure financing. Matches the needs of infrastructure financing. Matches the needs, but it is not materializing, but it is not getting implemented. It is not possible because they have got their own investment obligations. What is the obligation? They have to invest their maximum on government securities. So we have to relax the norms. We have to relax the norms. Okay, so here, so when you are asked to write critically examine the infrastructure problem, what we have in the economy, these are the valid points. When you bring these points, then when you elaborate on that, it becomes a beautiful point. That's all. Okay. Next one. Inadequate user charges. Even though many people, those who got socialistic view, they criticize that the PPP project, they are charging more toll on the people. They are collecting more fees from the people, even though they have the arguments in that way. So when you look at the numbers, okay, economic numbers in many projects. So normally we look at the projects which are more revenue generating, but we got many projects where the investors are not able to get the money back. So here, because the PPP project means not only about the roads where we have the peak traffic, not only about the ports or airports where you have the peak traffic, we got many areas where the people are not able to get back the money what they invested. The user charges are inadequate, and moreover, they are not able to raise the user charges also. They have to depend only on the traffic, okay, the intensity of users. So many areas, the user charges are not satisfactory for the people, those who have invested on the infrastructure projects. Okay, that is the point. Okay, that you can write. The user charges are inadequate. That's all. Even the three word conveys the point. That's all. I'm elaborating for your understanding. Yes, government securities means GSEC, or government securities, right? So government securities, you know about, no, government bonds, government, we have come across, normally the thing is treasury bills, other things and all the CDs, CPs and shares, they fall under the category of the risky instruments, okay, but they are also government securities, okay. Predominantly the bonds, GSECs, which you would have learned in the financial market class, no, they are the things. Now next one, lack of vibrant bond market. Next point, lack of vibrant bond market. What is the meaning of this point? Now imagine I am an infrastructure company. Okay, I'm trying to create some infrastructure projects in our country. I'm joining hands with the government. I have signed the agreement. I'm planning to start build the infrastructure project. Now I don't have the funds. So where I may plan to generate the funds, one is my own money. Second is I have to generate from the banks, or else because the bank, they got the problem, which means the fourth point, asset liability mismatch of the banks. So even from insurance, they got the commitment. So what is the other mechanism? I may go to the market, financial market. I may sell my bonds, or I may sell my security, which means I may sell my debentures. So I may sell my commercial papers. So you bring back all those things what you learned in the financial market. I will sell the instruments when the people, when they have the confidence, when they have the belief on my security, people, they will buy my security. When they buy, what will happen? Their money will come to me. Okay, my securities will go to the hands. After the stipulated time period, I'll give them back the money. But the people, they don't have that much confidence on infrastructure bonds. Example, in the paper, you would have learned about some bonds like Maharaja bonds or elephant bonds. What are those bonds? Elephant bonds, Maharaja bonds, they are the infra bonds in our country. So these are the bonds which are not that much attractive because infrastructure bonds has got long periods. So people are not having that much interest in those markets. So the market is also not vibrant, is not conducive enough for the people to utilize the opportunity. Other market, easily you can generate the money from the investors. So, but this market is not that much conducive. Okay, you can easily get the money from bank, but the bank should show the interest. But here, the market, even though you are permitted, you are not able to generate because investors, they don't have any interest on the securities what we are releasing for infrastructure projects. Okay, these are the practical thing. Okay, so the theoretical point is the market is very weak, which means you are finding it very difficult to generate money from this market. So these are the points what normally we discuss in our economic survey. Okay, And then students, regarding your doubt, I'm very interested to answer your doubts, but considering the time constraint, especially what we have today, because today we got other faculty also has got his class scheduled. Okay, so I should stick on to be to the time. Okay, so let me finish the topic, then each and every doubt I'll answer you back. Okay, so now next one is, and then I've given you a mail ID also. Okay, if you have got any query, okay, you can contact me also. So now my priority is to finish the class. Then your doubt, all the doubt, I'll give the due respect. Okay. So now issues. Next one is you write this slide. PPP is widely followed in our economy and in many countries. It's not only peculiar to India. In many countries, you can go and witness the PPP projects, especially in railways, ports, airports, energy. In many areas, we can witness the PPP projects. So with this, we are finishing the introduction, the technical introduction. First, I gave oral introduction. Now we have understood the issues, what we have. Based on the issue, now we got some idea. So PPP, these are the issues what we are having regarding the financing. So any question asked in the mains, what are the issues in infrastructure financing? So definitely, okay, we don't require any other points, students, okay. Apart from this, just the reading what you do in the paper, it's more than enough, okay. This class notes, you can attend any type of questions in the PPP, okay. Minimum 10 mark or maximum, okay, 12.5, sometimes 2 10-mark questions, 20 mark, even if we have a year where we got 2 questions from PPP, okay. This 20 or 22.5 mark, easily you can get from this notes itself with a small reading, with what you do from the paper, that's all. So this is the introduction. Now we are going to get into the next thing. Now, I'm going to explain about the PPP, which means if I ask you now, can you give me some example for the PPP? You all will send some messages like, sir, we know this models like some BOT. We know like some model like the management contracts, like the BOT concession. You all will give some example. But technically, there is a world of difference between the BOT model, between the management contract, service contract, like that, and leasing model. We have many more things. That minute differences I'm going to tell you. But before telling about those differences, I should give you some idea, because PPP means, now we know PPP means public and private, they both are combining, which means government and private, they are doing a project, that you know. Then second thing, you know about the problem what we encounter in the financing. Next thing is PPP means who are the people. One is public, one is private. Only whether we have the participation of 2 people, don't we have any other stakeholders? So many stakeholders will be involved. Who are the people involved in a PPP? That picture I'm going to tell you. Then I'm going to have the understanding of the different variations within the PPP model. Now we are going to understand about the stakeholders in PPP. Different stakeholders. Now, first one. In PPP project means we'll be having public entity. Who is that? It is nothing but government. Okay. So public entity means who is that? It is the government. Second one, the private partner, no, it may be a company, maybe Reliance, maybe the Ashok Leyland, okay, maybe L&T or Adani Group, whoever may be, okay. So the private partner is also known as concessionaire. Here, look at the word, okay, so it is not concession, concessionaire, which means the party who is getting the concession. The private party who is getting the concession from the government is called as concessionaire. So a private partner is also known as concessionaire, which means in PPP, the private partner who is getting the concession to run a government project on the behalf of government is called as concessionaire. Concession is different. These are the concessions, okay, what we provide. One who gets is called as concessionaire. Next one, users. Who are users? Imagine a road, highway. When you are paying the toll, okay, who are we? We are the users. When you're using the airport, when you're using the ports, anything, the users, which means the consumers of that project. The consumers of the project, we call them as users. Next one, special purpose vehicle. Now imagine, take myself, I am the owner of a private company, any company, maybe Reliance or Adani, okay, or Tata, whoever may be. Now I have taken a PPP project from the government. Now I'm building the project. Now by any unexpected circumstances, I'm not able to pay the money back to the loan. Then what may happen? The financial liability of the project, PPP project, which I commenced, will fall on the shoulder of my company, which means the financial prospect of my company will be affected. You are able to get understand, because when I connect my PPP project with my core business will be affected. So here to segregate, even though when the PPP project encounters a problem, my core business should be separated. It should not be touched. Okay, I should have that comfort level. Okay, if I'm not getting convinced, I won't show interest to start the project. So here, legally, a separate company will be registered. Okay, for example, if Tata gets a PPP project, they will start a separate company, which we call it as a special purpose vehicle. This company will be registered under the Companies Act. all the proceedings will take place under the procedural formalities of this SPV. Okay, once the project gets over on the last day of completion, okay, so then after that, after 3 or 4 years, when you have to manage the project, then we'll be having this SPV. Once everything gets completed, then they will dilute this, which means whatever the financial liability this SPV has got because of the PPP project will not touch the core company, okay, which started this PPP project, which means that you will start exclusively special company, which will completely segregated from the PPP project. All the financial, the defaults or the commitments, liabilities will not fall on the shoulder of the parent company. So the company which you have started exclusively for running the PPP project is called as a special purpose vehicle. Name itself says it is a special purpose. What is the purpose? Only for that purpose you are starting them. Okay, special purpose vehicle. It is a company which has been started by the private partner to carry out the PPP project. That's all. Here PPP means public private. Does not mean that only Indian private. Remember, public and then private means, okay, the private may be Indian partner or it may be a foreign partner. Okay, so remember, don't get confused. Okay, it's only for the domestic company, Indian company. Okay, any foreign company, even the ports, the airports, we have got the entry. Okay, even building the metros, we got the many Japanese companies. Okay, in the metro projects, everything is a PPP. Okay, so and then okay, when you're building the flyovers. So here, when we don't have the domestic capability, or sometimes for example, the pitch what they are pitching. Okay, when you put the project on the contract, okay, the tender, okay, what they tender, when it is more competitive, then we may give to the foreign player also. So private means it includes both domestic as well as a foreign player in the PPP project, not only the domestic player. You should have that understanding. Okay, now you got the understanding about, just to get some picture, which means that there is a public, there is a private, and then users, and special purpose vehicle means separately a registered company. So a company registered especially for the PPP project, which is legally separated from the parent entity, is known as special purpose vehicle. Legally, you separate it from the parent entity. Okay, parent promoting company, you have separated it. Okay, kept it separate. That is called as a SPV. Now comes the next one, transaction advisors. Next one, transaction advisors. Who are they? They are not the individual people. Transaction advisors are the institutions. It may be a bank, or it may be a financial institution. For example, it may be ICICI Bank, or it may be ICICI Bank, or it may be a City Bank, or it may be HSBC Bank, okay, or it may be SBI, whoever may be, or any non-banking institution. So here, this institution, now the government will assign, will choose them, pick this ICICI. I have chosen you as the transaction advisor. So when the government decides to build a particular road, means what is the nature of the road project, what is the cost of the road project, who are the potential private players available in the market, then to all the potential private players, the information will be communicated through ICICI to all the private players, then bringing them to the table, okay, then bringing the bridge between the government and then private, then asking them to bid for the project, then transferring the project from the government to the private, okay, then enabling the transfer of the funds, okay, all these areas from the start to the end, okay, these players they will stay with the government from the start to the end of the project. If the project is for 10 years, okay, from the start to the end, they will be with the government. So not only regarding the funding, okay, in all the choosing the partner, selecting the partner, and fixing the criteria for fixing the partner, and then designing some framework. So this is the framework based on which you have to choose the partner, then determining, okay, how the project will be commercially viable to the private partner. All the things will be in all those areas, supports will be provided by this player, who we call them as a transaction advisor, which means it is that it is an institution or entity which supports the government and then the private player in the entire period of the project. Supports means from start to the end. So these are the we call them as a transaction advisors. And then students, this PPP model, you'll be having plenty of doubts. All your doubts will get addressed when I go to the last slide. Okay, till then, now your doubts will emerge based on the fundamental understanding what you have now. Okay, but everything will get clarified. Okay, once we'll get into the complete, okay, content of the class. So now just you listen, okay, according to the flow of the class. At last, I think you won't be, all your doubts will get addressed. Whatever messages you are sending now, everything will get addressed. So this we call them as a transaction. This group we call them as a transaction advisors. Next one is called as a lead bank or the lead financial institution, which means a four banks may combinely together. Among the group, okay, one was given the maximum loan. So and then there may be a one bank or one financial institution which has accepted to lend for the project. We call this institution as the lead bank or the lead institution from the creditor group. Who is the lead institution? Maybe one, it may be two, or it may be three. From there we'll pick the the majority, the player as the lead bank. Then comes the last one, independent engineer, last one. Who is he? So it may resemble like the transaction advisor, but it is different. Transaction advisors or the institutions. We call it as for example, you know about in share process, no? For example, if there is a company, if the company planning is to issue some share IPO. So there, for example, takes an example, Reliance. Reliance is planning to sell shares, means Reliance will get the help of the financial institution. It will act as a bridge between the exchange, BSE, NSE exchange, and then between the customers, which means they will help help the company in giving advertisements, fixing the price, and then informing the customers, and then choosing the customers to whom the shares can be allocated. So same angle here, some companies guiding, we call this institution as a merchant banks. So which actually involved in guiding the company. Same angle here, this company is guiding the government and private in the PPP project, that is institution. But who are these people? Independent engineer. They are the individuals. For example, like the site engineers would have heard about, no? So an individual who will be appointed. So he will be appointed on the behalf of the government. He will go and inspect the particular site. So for example, a port is going to be built by the Adani. So from the day he'll send the report every month to the government. Well, this is the stage of the port. So in this way they are building. So they will act as a representative of the government. They'll go and visit the site and then keep on informing about the each and every milestone of the project. Okay, what is the stage of the project? What is the completion? So just they will tell about the scenario at the site. That's all. They are not like, unlike the transaction advisors, they are not involved in the financial proceedings or clearances, and then all those complex things and all they won't do. It's simply they'll go and visit the particular PPP site, then they will inform the government, or they will send some document or reports which will help the government to get some idea how the project is going on, progress of the project. This is about the independent engineer. These are the different people which we normally, these are the major category of people. A minor people we have plenty. These are the major category of people involved in a PPP project. With this understanding, now I'm going to get into the finer aspects of PPP. Now, what are the finer aspects? Now we know about PPP. Now we know about the PPP issues we have. Then you know about some stakeholders. Now we got some idea. Stakeholders, government, and then private, and then users, SPV, transaction advisors, lead bank, independent engineer. You got some idea. Now, what are the different PPP model? Okay. Now, PPP means we all know that it is a mix of public as well as a private partner. Okay. So public and private, they combinedly involved, they carry out the project. Now here, based on the role what we give to the private player, based on the concessions, based on the level of role what they play, PPP projects are normally classified into different types. Some PPP projects, we call them as a service contracts, which means the service which are rendered by the government is rendered by the private on behalf of government, which means earlier government was giving that service. Now the private party will be appointed by the government. They will take the role of the particular service. Okay. Example. Okay. Now I'm giving Aadhaar. Hereafter, okay, the Aadhaar services will be given to the particular private player. Passport. Okay. Hereafter, the passport services I'm going to give it to the private player. So in this angle, certain services which were earlier provided by the government will be hereafter served by the private player. So in this angle, we call something as a service contract. Now, how to understand the picture means in the external sector class, when you learned about external sector, so here when you covered about trade agreements, okay, trade agreements, sir would have taught you about different trade agreements. For example, he would have taught you about free trade agreement, then about the PTA, then about the customs union, then about the common market, then about economic monetary union. Like that, you all would have learned in external sector class. Just you bring it back, bring that understanding here now. So PTA means one country when it is making trade agreement with another country, in certain level, minimum level relaxation they will provide to each other, which means it is a basic level. Now FTA, what they will do, it is a level higher. You will provide more relaxation, which means you will remove all duty, only particular duty, sensitive goods alone you will levy duty. Next thing, customs union, you are going level higher. You will remove entire duty. There is no sensitive category also, which means in same angle, each and every level you are progressing. Able to get the point? And then you take the one more example of Mini Ratna 2. So it is a level lower. Then we have the Mini Ratna 1. Then we had the Navaratna. Then we had the Maharatna, which means we are making the progressive. Okay, we are giving scope, increasing the scope from each level. Same angle. Service contract is the basic level. Then the next level of PPP is called as the management contract. Then the next level of PPP we call them as a leasing contract, where the government will give the project to the private players on lease. Then some project we call them as a concession contracts. Then some project we call them by the name called as a BOT contract. So BOT is the last leg, okay, last stage, which means the most advanced stages of PPP model. So PPP model are of different type, starts from service, then progress to the management, then to the lease contract, then the concession, then BOT. This is the rough idea. This is a one way of pitching. Okay, pitch this with respect to this point. All the things you can take notes, students. Okay, you can listen like a story. Okay, so this is the first level. Second level, in some service contract, the point is a one way. Okay, second point is service contract, the tenure may be 1 year, need not be 1 year. Sometimes service may be 2 years, which means when a government allocates a project to the private player, so the privates will be given the contract to be signed for 1 year. But management means higher than 1 year, which means 2 years, 2 years, 3 years, whatever may be. Here, higher than 2 years, 3 to 4 years, lease contract. This one definitely higher than lease contract, 4 to 5 year or 7 year. This one more than 7. So I'm putting some number, which means it need not be 1. It may be 2 year, it may be 3 year. So now understand, the BOT contract has got long period of the contract with the government. Service contract may get expired in 2 years or 3 years. But BOT means maybe 15 years, maybe 20 years. Okay, that is a second understanding what you should have regarding the PPP model, regarding the PPP. So in PPP, there are different variations. So what is the role of government? What is the role of the private? What is the risk of the player? What is the nature of role they are playing? What is the tenure? Based on that we classify. Now comes the third one. Now I am a private player. I'm making a private contract with the government, means in a PPP model, the risk level, you know that always in a project there is a risk, which means the financial risk I'm going to suffer. The risk is very, very low in a service contract, which means very less. You take the financial market. In financial market, how we say, treasury bills are more safer. So you go treasury bills. Then comes the next one. Next one is certificate of deposits are safe. They are debt securities, but compared to treasury bills, they are riskier. No. So treasury bill, certificate of deposits, then commercial paper, they are safe, but compared to the certificate of deposits, they are riskier. Next one, okay, commercial papers, okay, then we are saying the bonds, then we are saying debentures, then the risk is going to share. So security level, the risk keep on changing, same angle. Service contract risk is very less. Management has got risk level higher than the service contract. Lease will be having risk higher than the management. Concession level has got level higher than the lease. Then BOT has got very high level of risk. Then then if there is a risk means economics, always there is a thumb rule. Whether it's a security market or financial market or in the PPP project, based on the risk only, you'll be getting the profit. Risk is directly proportional to the reward. So service contract, the revenue, what you can generate is very less, but BOT, the revenue potential, what you can generate is very, very high. So based on the risk, the reward goes on. Okay, these are the fundamental understanding. Remember, the first level service contract, second level, third level, that is a one way. Second one based on the tenure. Then okay, so third one is based on the risk level. Risk is very low in the service contract, very high. Based on the risk, fourth point is a reward. These are the 4 ways I differentiate. Now comes the last way of making the difference. That is the most important, most essential understanding what you should have in the mind. Okay, in what way we classify all the PPP model means PPP when a government and then private signs, 5 fundamental terms are considered, students. What are the 5 fundamental terms means? Who is going to operate and who is going to maintain a PPP project? Point number 1. Who is going to operate? Who is going to maintain? Second one, who is going to design the project? Okay, the PPP project, who is going to make the design? Second one, who is going to finance the project? Who is going to put the funds? Third one is a finance. Fourth one, who is going to build the project, construction, whether the government or the private. Fourth one, on whose side the ownership will be conferred. Ownership will be with the government or will be with the private or will be for a particular period will be given to the private, will be transferred to the government, the fifth one. So remember the 5 points. Who is going to operate a PPP project? Who is going to design the project? Who is going to finance the project? Who is going to construct the project? who is going to own the project, ownership. Based on the 5 things, we differentiate the 5 contracts. Okay. So all the things I'll be converting them into notes. Don't worry. Okay. So now we are going to understand the differences. What are the differences? Now you look at the slide. Okay. So did not write, listen. So PPP models. So these are the 5 models. No, I told you service contract, management contract, lease contract, concession contract, BOT of contracts. Okay. So this is concession. Normally we call them as a BOT concession, or without using the BOT, we can call them as concession. Either way we can call. Okay. But here this is called as BOT contract. Now, what is the fundamental point? Okay. Now, so they are classified based on this aspect. Okay. All the things you can write. I told you 5 areas: operation, maintenance. Second one is design. Third one is the finance. Fourth one is build, and then the ownership. Okay. How it gets classified means, okay, now look at the point. Okay. Now let me write here. Let me write here. Once this thing is gets properly conveyed by me, then you'll get the complete confidence about all the 5 projects. Then you can write. Okay. The next 10 minutes continuously I'll be showing the slides. You can write. Okay. Now listen. I told you the PPP projects, they get classified only based on this approach. Okay. First one is the operation and maintenance. Second one is, I told you about the design. Then third one is about the finance. Fourth one is about the build or construct. Who is building the project? Who is constructing the project? Build or construct. Fourth one is regarding the ownership. Sorry, fifth one is regarding the ownership. These are the 5 criteria based on which PPP projects are technically classified between the government and then private player. Okay. So now here we have the categories. Here we have the categories. Okay. What are the different categories? One is called as a service contract. Then comes the next one called as a management contract. Then comes the next one called as the lease contract. Then next one is the concession, and last one is called as a BOT contract. Okay. So this you can copy along with me. Okay. Other points then I attach. Okay. So this is the slide. First you put the table, students. You put the table. First you write the heading as the different PPP models. You write the heading. At the heading, different PPP models. Different PPP models. Then you write. Okay. First you write 5 serial numbers before putting the table. The different PPP models, you can write the 5 table. First one is called as a service contract. Service contract. Second one is called as a management contract. Then third one is, second one is management contract. Okay, it's a management contract. And third one is lease. Fourth one is concession or BOT concession. Concession or BOT concession. Fifth one is BOT. Fifth one is BOT. Okay, students. Now remember, if it is a service contract means, okay, here operation maintenance. Okay, here this operation maintenance will be given to the private player. Operation maintenance means, okay, here see, part of this, first you don't write, listen, okay. Part of it will be given to the private, and then rest of the operation government will do. Which means in service contract, some part of the services will be given to the private player. Design will be with the government. Finance will be with the government. Building will be done with the government. Ownership will be with the government. Which means only the part of the services you will give to the private player. Do not write, listen now. You get the picture, then you can write. Okay. Then you'll get the solid understanding. Next one is in the service contract. Look at the picture. Here, entire thing will be given to the private player, which means the entire range of services. They'll manage all the aspects completely. For example, in the Chennai city, okay, cleaning the sewage, or then okay, so the garbage cleaning. Okay, when you are assigning the job to the private player, when he is entrusted with the task of picking the garbage alone, So picking the each and every home, they will pick, that's all. But they are given the role of picking the garbage and then recycling them, all the disposal of the things. Okay, everything they are interested. That is a complete management you are giving. But when they are saying you are interested only with the recycling, remaining things our corporation we will do. Okay, we got our own staff, which means a part of the service alone you are giving, which means the first category. But the entire range, for example, to supply Chennai city water or any city water supply. So managing the water source, and then okay, managing the pipelines, and then distributing the water, all the things, all aspects completely you are giving, that we call it as a management, which means management is a level higher than the service contract. So here this will be given to the private player, but this design will be with the government, finance will be with the government, build will be the government, ownership will be with the government. Look at the difference. This first you have to copy the two things. So we are learning about the different types of PPP, students. So in PPP, there are 5 fundamental variations. All 5 are PPP. Service contract, no other services, or any passport services, or any water management contracts, waste disposal contracts, waste disposal management. Okay, these are different things. Not only the toll, what we have is only PPP. Okay, we got many PPP. Okay, next one is a lease contract. Here, look here. Privates will be given the complete operation lease contract. Okay, you would have seen many railway canteens in the lease method. Okay, railway canteens are the common lease what we come across. Railway platform, government asset, you are giving the canteens to the private players. And then okay, many things, railway tracks and all recently given on lease to the private players. So here, privates, they'll get the operation maintenance, they'll get on lease from the government. Then design will be done by the private. Design by the private. And here, part of the finance, okay, some project, okay, but remember, not all projects, some project, part of the things will be done by the private, part will be by the government, and then here, part will be done by the private, part by the government, this one completely by the government. Look at the extra level what you are giving. So here, remember, even when you go and ask even a government servant, okay, cannot exactly say the difference between a PPP, because in PPP within the lease, there will be some 20 different models will be there. In one lease, okay, certain 10% permission you will give in finance. In certain lease, 20% you will give. Certain thing, 35%. So it depends on the model to model. So you cannot generalize all the PPPs are. PPP means like that, you cannot tell in one word. So based on the terms and conditions, what do you include? Based on, for example, when you are allowing the private to build some 2-kilometer railway lines, so it may require certain level of finance. But 200-kilometer railway lines, it may require more level of finance. So based on that, the conditions also will keep on changed by the government. So that is the third one, lease contract. Now look at the fourth one, concession contract. Now concession contract, let's look at the point. Here, entire role will be given to the private. Here the entire role will be given to the private. Here the entire role will be given to the private. Here the entire role will be given to the private. But this ownership alone will not be given to the private, will be under the government control. Understand? Okay, they cannot sign concession contract. The privates cannot get the ownership. Ownership will not be transferred in the private's name. So those projects we call them as a concession contract. Is the fourth one. Now comes the last one called as a BOT concession. Sorry, BOT contract. So here, this one by the private, this one by the private, this one by the private, this one by the private. Here also, privates will own the project for certain level. Privates and then government will also own some project. Sometimes for 20 years will be given to the private players. 15 years will be given to the private players. Then they will transfer to the government. Okay, so this is the main difference. You are giving ownership also. Ownership rights will also get transferred to the private players. So this is the one way of understanding. First you write, then I will tell you the remaining points. Students, when you understand this picture, then you will be thorough with the PPP, students. Okay. Give some examples, everything. Okay, so So will be you'll understand. Yes, transactional advisors are also called as a mediators. Lead bank is an institution which is the dominant lender among the lender group, dominating lender. Okay, it's one among the lender group who is the dominant, who is given maximum financial aid. Okay. Okay, now have you all copied this? Okay, so it's a one way. Now I told you there are other ways also, no? So because we are before, have you all copied? I'm going to erase. Okay, so this is not, I'm not writing in the slide. This I'm writing in the black screen. Okay, so slide means I can show these things once again. Have you all copied? Those okay, I'll give you extra 30 seconds time. Okay, everyone, those who are not copied, kindly copy, finish copying. Okay, so this is a one way. So PPP model, and then we have many more things to be covered. Okay, so now only we are in the, okay, so now we have 5:55. Okay, we got half an hour. Okay, we're going to cover many more. So thing is, first you understand this basic premise. Okay, so this is how. Now what is the second thing you can write? Okay, first second write. Okay, second you write. Second, this is the first point. So next thing, the PPP contracts are also classified based on the level of concession. Second point you write. PPP projects are classified based on the level of concessions. I'm erasing, student. Okay. PPP projects are classified based on the level of concessions. Based on the level of concessions, service contract, service, they got less concessions by the government, less concessions or some concessions from the government. And then next one is management contract. More concessions than the service. More concessions than the service contract. More concessions. Concession means here I don't mean the fourth concession. So that is a concession contract. Here concession means the privileges. Privileges. You can, instead of using the word concession, you can use the word privileges also. Privileges. So it will avoid the confusion because there is a contract called a concession. You should not be mixed confused with that. Instead of concession, you can replace it with the word privileges. So less privileges from the government. Management, more privileges from the government, more privileges than the service contract, Then comes a lease contract. More privileges than the management, more privileges than the management. Fourth one, concession contract, more privileges than lease, more privileges than lease. Then comes the last one, BOT concession, BOT. Here more concessions, more privileges than concession contract, than concession. Okay, so the second point you have drafted based on applying the principle privileges. Privileges is the basic premise based on which you have constructed this under this point. Okay. Second point is, first one is based on the 5 parameters: design, build, finance, construct, and operation, maintenance, and ownership. This one is based on the privileges. Then third thing, okay, third way is based on the risk. Third thing you write, based on the risk and reward. Based on the risk and reward. Based on the risk and reward. Risk and reward you can write, you can finish in one line. Okay, one line, how to write? Service has got less risk. Okay, first you write the heading risk. Okay, risk. First you write risk. Service has got less risk than management. Management has got less risk than lease. Lease has got less risk than concession. Concession has got less risk than the BOT. In one line you can finish. Okay, risk. Then you can write the next point as the returns. Students, I'm not looking at your doubts, so I'm just focused only on finishing the topic. So excuse me if I'm not answering your doubts. Definitely come back to your doubts. Returns. Returns, service contract. Service contract provides less returns. then the management, same angle. Management has got less returns than the lease. Then lease has got less returns than concession, then BOT. Then BOT. Okay, so 2 lines we complete. Based on the risk and reward. Which means the last one, BOT has got more risk and more returns. Then last thing is the based on tenure. Based on tenure. Last thing based on tenure. Last one you can write based on the period. Okay, period of contract. Based on the period of contract or based on the tenure. Based on the tenure of contract. Tenure or period of contract. Service contract has got less tenure than the management. Management has got less tenure than the lease. Lease has got less tenure than the concession. Then concession has got less tenure than the BOT. BOT has got more tenure. That's all. Okay, now you got more good understanding. When you are asked some question about critical exam and discuss anything, you can write, student. Okay, so this is a fundamental understanding. Now we are going to learn more points. Okay, now so first let's finish the classification. Okay, then we'll learn about HAM model and VGF. What is the VGF? What is EPC? So those things I'm going to the same way. One more important classification I'll add up at the end. Okay, now students. Okay, now you can copy the points with the help of the slide. So now, okay, I have written now 4 things. One is based on the design, build, finance, construct, ownership. Next one based on the risk, based on the reward, based on the privileges. Okay, so now we can write the, let's get back to the slide. Okay, now you can have a look here, students. Okay, so you'll understand that you have not missed any slide. Okay, so you have copied up to this slide. Okay, so we have copied up to this. Then PPP models you have written. Then you written the 5 types we have written. Then PPP differences. I have shown you the 5 differences. Okay, 5 differences based on this fundamental premise. Okay, I told you how based on the operation, based on the design, finance, and construct and ownership, we have classified. Okay, that you written now. So operation, maintenance, service contract means some less part will be given private. Okay, so in this angle we finish. Now the next thing is you write some other points regarding service contract. Okay, now write service contract. Okay, 5 slides I am going to show you. Okay, now it's up to you to write. Okay, service contract. It is also known as operation maintenance contract. It is also known as operation maintenance contract. Operation, just it's up to you to copy. Operation maintenance contract, also called a service. Example, for the service contract, you can take as any digital services or e-governance services of the government or other services, passport services, anything you can write. Okay. So some part of the service government will entrust with a private player. So which means a private player is doing the service which was earlier done by the government, means it is a service contract. Particular service will be provided by the government. Okay, sorry, by the private player. So here these things are already written. Ownership remains with the entity. Okay, this you can write or you can leave. That's your choice. Because we already finished the points based on the design, build, finance, then based on the tenure, then based on the risk, based on the reward, based on the privileges. This is additional information what you're writing in the notebook. Where the private operator under contracts operates a publicly owned asset for a specified term. Okay, it's clear now. Service example, some e-governance services, other services, you can write passport services, anything you can write. Or any tax filing services, anything you can write. Okay, so any area, government, when they would like to provide to the private player, they will entrust with them the responsibility. The next one is management contract. Management contract. Example for the management contract is you can see many. Okay, and the water supply, private players are given the water supply task. Government may give them the entire management, not only water supply, water distribution and water maintenance. So the reservoirs, okay, the lakes, everything will be maintained by the private players. So the key feature of the management contract is that the public entity engages a private partner to manage a range of activities. Look at the point. In service contract, one activity you will entrust with them, but here you will give them the multiple activities you assign to them for a relatively short duration, 3 to 5 years. which means the duration higher than the service. There, but don't think that 3 to 5 is the only. Some management contract goes for 7 years also. So we have many exceptions, but the general is, so management has got period higher than the service contract. Ownership of assets and investment typically remain with the public entity. But here also, okay, recently we have included a management contract for the water supply, okay. So where investment also we asked the private players to do, instead we assured them some extra returns. So management, this is the fundamental plot, but small variation may happen. You should have that always, so that openness you should have in the mind. Don't approach the things in a more rigid way. Example, water management contracts or waste disposal contracts, waste collection, segregation, disposal and recycling, contracts, like that, or else even now during the pandemic, no, so pandemic, okay, all the PPE kits, all the masks, okay, all the hospital disposals, okay, we are giving to the private players. They have to completely dispose them in a proper manner. So as per the government guidelines, regulations, anything, okay, not binded by the small examples. You have a broad view, management contract, water management or waste collection or any disposals, okay, any resource management, water body management, whatever may be, okay, or particular railway track management or railway platform management, railway station management, okay, which means they are not the owner, but they will be given the role of the management, cleanliness, everything, okay, ensuring the electricity, everything, the tracks, okay, everything, the security. So in that angle, okay, we may give them range of activities. That is a management. Now, next one is some example for management contract. Basic management for fee contract. They will be given some fee. Some contract, you will give them performance-based incentives. Some contract, you give them some performance-based incentives, which means just to improve the efficiency. I got 12 pending doubts. Okay, sorry students. Okay, so I could not look at your doubts now. Management contract with the performance incentives related to cost and equity, cost and quality. So the point is some basic fee, which means flat amount may be given, or else performance-based incentive may be given. So these are the two variations within the management. Now comes the third one, lease contract, lease, where the public entity may give a particular government property on lease to the private, or government will take a property from the private on lease. Okay, so this lease may take place within the country, outside the country. Even you can take the current example, the Hambantota port, okay, China, okay, Sri Lanka special economic zone, which China has taken on a lease from the Sri Lanka. It is the cross-country lease. But within the country also, what we are taking about, within the country, the private place may be given. So common example is the railway canteens. Common example, okay. Next one, lease contract. Third one, lease contract. The asset is leased by the public entity to the private partner. Lease contracts are usually of medium-term length and may involve capital investment by the private partner. Here, the investment level jumps in. In service and management, they need not do that much investments. Here, see, you look at the example, operation maintenance by the private, but here design, part of the build, part of the finance. Okay, I mentioned no, part by the private. So these things and all will jump into the lease contract. And it's comparatively for a longer period. Lease, the tenure is higher than the management contract. This point is the same point I'm writing, only at the last contract, I'll change this line. Till then, the same thing, copy, paste, that's all. Lease contract, okay, the railway canteens or railway tracks. Okay, the government buildings on lease to the private buildings on lease by the government. Then comes the next one called as the concession or BOT concession. BOT concession. Actually, here in concession, the role is huge on the private player, because operation maintenance by the private, design by the private, entire building by the private, entire finance by the private player. Actually, you know about two differences. One is called as a greenfield project in economics, and one more is brownfield project in economics. What is meant by greenfield? When you are building or constructing a fresh project on an empty land, vacant land, that is called as a greenfield. For example, when you are building a new airport, that is called as a greenfield. But now we have Chennai airport. Chennai airport, when you are trying to expand them, or when you're trying to beautify the Chennai project, or you're going to increase the security arrangements, which means existing project, you are going to enhance its capabilities or expand its area. That is called as a brownfield. So in global perspective, concession, they apply for greenfield also. But in the Indian perspective, look at the word UPSC perspective, Indian perspective, concession contracts are applied only for brownfield project, and then BOT is applied for the greenfield. For example, when you are building a new airport, the projects are allocated on the BOT model. But when you are trying to expand or renovate or repair or beautify or secure the existing airport, they are given under the concession contract. So concession contract we follow for the brownfield project in India. BOT we follow for the greenfield project in India. Able to get my global level? Okay, that's not the template what they follow. But in India, two things: one is concession, one is BOT. Concession we apply for the brownfield. BOT we apply for the greenfield. That's all. Okay, so these are two things of what we apply in India. Now you write the lease variance. Lease variance. So before that, I have explained about concession. First, you write about lease variance. So in lease, there are many things. Okay, here by looking at the word itself, you can understand the picture. Build, lease, transfer. Next one, build, lease, operate, and transfer. Based on that, the functionalities will differ. Next one is build, transfer, and lease. So what is the variation? By looking at the term itself, you can understand. Here, the private will build, then okay, they will lease it to the government. They take it on lease. Then after the lease period is over, they will transfer to the government. Here they will build, they will lease, and then okay, they will operate and transfer. Here they will build, they will transfer to the government, then they'll take it on lease. So all the things are determined based on the need of the project. Okay. So this is about the lease. Now we're going to write about the concession. First we have to finish up to BOT. Then only we have got a 5 different variation. Now we have learned only about service, management, lease, concession, and BOT. Here we have got 5 more variation called as a EPC contract, then BOT contract, then about the BOT annuity, then about BGF, then about the HAM. So that we have to learn. Okay. So first we have to finish up to this 5. The next one is BOT concession contract, concession. This need not write, student, because this already we have written at the start of our class. Concession means certain bundle of rights given by the government to the private. If you want to write, you can write. I leave it to you. Okay. Now, what is concession contract means? Have you all copied? Cynthia, all doubts kindly ask after I finish the class. Even chats, I'm not replying. Definitely, okay. Hand raise, I could not be able to attend now. So, okay, so I'm looking at your hand raise. Kindly excuse me, students, because I have to stick on to the time. I will finish the class because even a single hand raise definitely will consume more time. So I'll handle at the end. Okay. Kindly, students, okay, excuse me for the okay. So now let's finish the portion in a proper way. Then I'll come to individual doubts. BOT concessions usually refer to the brownfield operations or extensions or operation of existing systems. So only if the 5 I am explaining now. Okay, the 5 I will explain in elaborate way. Now I am giving the time to write them in the notes format. Okay. Apart from this, the ownership right is retained by the public entity under concession. So this you need not write. Already we have written no ownership is with the government. This point you not write. Okay, you can save some time. Okay, students. Okay, this point already you all know. You can cut down this. Okay, now the next one is called as the BOT contract. Next one is BOT contract. Last one is BOT. In India, we apply the BOT for green field, and then previous one is for the brown field. Okay, students, right? BOT contract. Okay, what is BOT? BOT contract means it's a type of PPP model where the greenfield assets are built by the private players. Greenfield assets are built by the private players where the risk level is considerably higher than the remaining models. Here the risk, okay, the volume risk, finance risk, potentially price risk, all risk. Anyway, we'll learn about the risk in the coming segments in a more detailed way. Kindly copy this. Then within the BOT, we have many models. So many of you were saying, okay, texting me messages since the start of the class. Sir, BOT toll, this thing, okay. So that is a model which comes under BOT, the toll or BOT annuity. They are the variation within the BOT. BOT is a group under the PPP. So PPP is a large group where we have the 5 different major variation. Here we have the service, we have the management. Within the management, I told you management for fee, management for the incentive. Then we got the lease, there we have the BLT, okay, BLTA, okay. Like that we have many more things. Here we have concession, then we have the BOT. Here we have the different many variation, BOT, BOOT, BOT annuity, BOT toll. So like that we have many variation within the BOT. So you get this picture, PPP kulla BOT, BOT kulla we have the other variation. What are they? We want to learn about them. So you should get this overall picture. Now students, okay, first we have copied. With this, we are finishing this segment. Okay, then only we got one more segment. Okay, 6:15. Okay. Now the BOT variants. Design, build, operate. It is the one type of BOT contract. What is that and all? Technically, not confused. Okay, because exam angle. So design, build, and operate means very simple. They are private. They will design. They will build. They will operate. DBO contract. And then after operating, the contract will end. That's all. Then next the contract will be has to be renewed by them. So new tender will be issued by the government. That's in that way. So what are the process involved is given by the words. Design, build, operate, and transfer. Design, build, finance, operate, and transfer. Or build, operate, transfer. Build, own, operate, transfer. Okay, so these are the variations within the BOT model. Okay, students, now I'm going to get into that very important concept. Okay, so with that, the conceptual area will get over. Then only writing part will be pending. The next second half of the PPP. It's a very smaller one, but very important one. So now you know about the PPP and PPP issues in financing, you know. Then you know about the PPP model means it is a arrangement between the government and private. Based on the nature of arrangement, 5 fundamental models are there. Service contract, management contract, lease contract, concession contract, BOT contract. Within the 5, there are variations are there. How they are, they have to be understood. Okay, based on tenure, based on risk, based on reward, based on privileges, based on operation, maintenance, design, build, finance, construct, and based on the ownership, we have classified them. We have learned about the variance. BOO is a variation within the BOT, that you know. BOT toll means BOT kulla or toll. Okay, so what are they means? Here they will collect the money through the toll method. Okay, annuity means they won't collect the toll. Okay, government will give them annuity. Like we know about the pension annuity. Okay, what we really say, same model. Okay, so that you'll understand further. Now these are the overall variations. Have you all copied, everyone? Jyoti, have you copied? Copied, fine, good. Okay, now the next one. General outline of PPP models. First you write before getting into the other things. General outline of PPP models. How the PPP models are basically, okay, how they are functioning now. Prevalent. Okay, look at the word prevalent. Okay, now the existing one. General outline of prevalent PPP models. One is user fee based BOT model. The users, they have to pay the amount to the builder. User fee. Next one here, the government will pay them. Where you cannot collect the money from the users. Example, rural areas. So, or where the vulnerable people will be using. Okay, so annuity based model. Then performance based management or maintenance contract, that already we have seen. Then design, build, turnkey contracts. So what is this means? Okay, design, modified, design, build. Normally, first you listen, there is a type of the contract called as a design, build contract. These design, build contracts are nothing but where the government will invite some bids from the private engineers. For example, when the government is planning to build a project, government will invite some bids or tender from the private players. Based on the tender shortlisting, a private engineer or private company may be chosen by the government. They may be entrusted with the contract. They may be given the contract. Example, some 10 crore project may be handed over to the private player. So here, the private player, once he completes the project, government will release the entire 10 crore. That is a normal design build. Private, they have to design, they have to build. Why we are doing this? Because we feel that the private engineers or the private companies, sometimes they got some expertise. They got their knowledge. Okay, we are trying to use them by asking them to design and then build. For the project designed by them and built by them, government will pay the amount in one shot, one settlement. 10 crore means once the project gets over, complete money will be released by the government. That is a normal. But here we have a problem. What is the problem? I'm the government. I have given a project to the private player. Private player, after consuming 2 years, now he has completed the project. Once the project gets over, government has to release the entire money. So here, when the quality is compromised by the private player, or if he has not built the project according to the government standard, so here there is no other option because the project has got over. You have to pay them money. Okay. So here these kind of issues arise. To avoid those issues, what the government will do is in the design build contract, they are following a model called as turnkey. What is turnkey? For example, 10 crore means now the government will set milestone 1, milestone 2, milestone 3, milestone 4 or 5, whatever may be. So here the private will check whether the first milestone has been built according to the government standard or not. Then they release the first 20%. Then the next 20%. Here, if they anything they have compromised, not as per the government standard, they will be given warning. They will be asked to rectify the mistake. So here the same thing. So what is the use? One thing is quality is ensured by the government. Second thing, government is not burdened with the responsibility of lump sum release of the money. Lump sum you do not release. In the part, you can release the amount to the private player along with the insurance of quality. So that is called as a turnkey contract. Turnkey is here normal project where you are allocating to the private player. So where you once the project is constructed by them, you release the entire money. But here you won't release them in lump sum format. You release them based on the milestone. That is called as the turnkey contract, which means normal design build contract where the funds gets released by the government based on the crossing each milestones. Okay, so design build contracts. Clear, no? So in design build is a normal engineering expertise is sought by the government. So the engineers, once they complete, government has to release the entire money. But here what they will do is, here they will release the money based on the milestones, achievement of certain milestones. So these are the normal prevalent models what we have. Now we are going to get into the very important segment, student. Have you all written? So in design build is a normal or engineering contract நம்ம கொடுப்போம். Project build ஆனோன்னா we'll be releasing entire funds. That is a normal method. But in turnkey, we release them according to the achievement of milestones. Now we are going to learn about the very important segment. Okay, so there is the next left out understanding. Okay, things which has to be understood by you. Okay, what is that means? Recent times in paper you are coming across some variations. Recently, some variations or some innovations. Based on the existing PPP in BOT model, privates are complaining that, oh, PPP, we got this much burden. Okay, we need this kind of support from government. If the government does this, we'll be happy. Okay, like that, they are raising some complaints, raising their concerns. Accommodating all their concerns, government is making some variation within the BOT model, within the concession model, they are doing some variation. What is that? That we are going to learn now. Okay, so in recent times, you would have heard about the type called as a VGF. In the paper, viability gap funding, like that you would have come across. or you would have heard about the model called as a hybrid annuity model, HAM model. Recently, it has been considered by the government as a viable alternative to address all the existing issues in PPP or all the existing issues in BOT. Like that, people are talking about. Then you would have heard about EPC model. Like that, many more things are there that you are going to. I'm going to explain now. What is the concept? Okay. So here, okay, let me to make the use of the blackboard. Okay. Before that, you write this. Recent models, VGF and HAM, you write. Prashant, class 6:45 முடியும் பிரசாந்த். சாருக்கு அப்படி இன்ஃபார்ம் பண்ணிடுங்க. 7க்கு ஆரம்பிக்க இன்ஃபார்ம் பண்ணிடுங்க பிரசாந்த். ஓகே. Okay. So recent models VGF and HAM. So next one is okay. Okay, now we're going to learn about the VGF and HAM. Now okay, let me write here. VGF and HAM means okay. So here one is EPC model. EPC. You can write okay in the same way. Okay, how we wrote for the previous segment. So one is okay EPC model. Okay, here one is EPC. Next one is first let me write. Okay, operation risk, operation and maintenance risk. Maintenance risk. Next one is revenue risk. Next one is finance risk. That's all. Okay, next one is finance risk. Here we have, you have to add 5 rows. One is EPC. Next one is BOT. Next one is BOT annuity. BOT annuity. Next one is VGF. Last one is HAM. Okay, that's all. You draw like this. 4 columns, 6 rows. Okay. So now listen, students. So there are there are 5. I'm going to explain about the 5 recently applied models in our PPP that I'm going to differentiate based on the fundamental risk involved. One is who is going to operate a project. First one, operation and maintenance. If my letters are not clear, kindly students you can write. First one is operation and maintenance risk. Second one is revenue risk. First one is operation maintenance risk. Second one is revenue risk, which means whose shoulder the revenue risk, which means there may be high revenue or there may be low revenue. Who has to accept that? Okay, whether the plus or minus. Okay, I have to accept. Fine. Next one is who is going to sponsor the funds. Finance risk. Who is going to put the investments? That's the third thing. Investment risk. Investment risk or finance risk. EPC means that model is called as engineering and procurement contract, which means government will get the private engineering expertise is procured by the government. The same design build, design build is known as EPC contract. Design build. Okay, the same thing. Here, operation risk is on the government, revenue risk is on the government, finance risk is also on the government, which means government will put the money, will give the project on contract. Okay, once the project gets completed, government will give the money, then revenue on the government, government will maintain the contract. Privates, that's all. You build that, then they leave the project, they won't operate. Operation maintenance on the government, government will operate. First you write. EPC means all 3 by the government. When I tell all 5, you will understand, students. Next one, BOT. Okay, now you know about BOT, but BOT I am going to pitch in this angle. BOT means this operation by the private, Revenue risk is on the private, which means when you are BOT annuity or BOT toll or BOT any model, if you get more toll, it is a more revenue. Less toll, it is a loss to you. Risk is on the private shoulder. Remember, okay? When they are collecting more toll, we will criticize them. But when there is less toll, okay, they have to accept the loss. Private finance risk, investment, they have to arrange all the funds for the project. Government will not give them any support. BOT now, private, more risk is on the private. So many private people, they started complaining to the government. No, we are not happy. BOT, we are having more risk, more risk. So after understanding their complaint, after to accommodate their concerns, what the government did means they introduced a model called as BOT annuity. In BOT annuity, what they will do is here revenue risk. No, revenue risk is shouldered on the government. So you don't worry. BOT annuity, I will give you fixed amount. You build the project. Private, you operate the project, and then initially, okay, you build the project private, but revenue, whether it's high toll or low toll, it is my burden. Don't worry about it, okay? Less user charges, you need not worry. More user charges, you need not worry. Even though there is zero charges, you just build the project, you run the project. Every year, you'll get amount from me, okay? For the investment, what you have done, you will get returns from me. That's all, okay? You have to invest, you'll get the returns, okay? In a fixed format, or in an incentive based format, okay? The more the revenue, you'll get more revenue, but you'll get a particular amount. So there is no risk on the private player. So look at the point, government shoulders the revenue. So this is the clue. Annuity. Private will get annuity, but government, they will accept the burden. Annually, particular amount will be given to the private player. It may be a fixed amount or it may be a variable amount. Next one. Now look at the next thing. VGF. Here, many privates, they started complaining. Okay, in BOT annuity, you address the revenue concern. But our main problem is not revenue. So initial investment, we were not able to do or to arrange all the investment. You have to support us in finance. So for that answer, government came with a solution. 30% I will sponsor. Okay, 30% government I will sponsor. Balance 70%. Okay, privates you have to arrange. I will address the viability gap. Small gap, I will address 70%. But this one, private, you have to accept the revenue risk. This you have to accept, but I will shoulder your finance burden. Look at the change. VGF na revenue finance risk is shared by the government and private, but revenue will not be shared by the government. VGF. So here one sort of privilege. Here another sort of privilege. Then, okay, people, they started again complaining to the government. No, we are not happy. BOT, annuity, one aspect is okay. In VGF, one aspect is okay. But we need both. So then government came with a model called as a HAM. Hybrid annuity model. Hybrid annuity model. What does that means? Here, look at the change. Okay, hybrid, you would have sensed the point. Okay. On HAM, hybrid annuity model, operation by the private, no doubt, because they have to operate and maintain. But here revenue risk is on the government. Revenue risk is on the government, and then here government and private, they will combine. Which means 40%, 60%. That I have given in the slide. Okay, in a detailed way I have given. That's why here I'm not writing that. 40, 60, in what way 40, 60? Detailed way I have given the slide. Now students, look at the point. That's all. Conceptual portion is over. Now only your job of copying the slide is pending. Now look at the slide. Now it's very clear. No, main angle you may be asked. In what way viability gap funding is better than the existing BOT model? Or what way viability gap funding is better than the management contract? Critically examine, discuss. So in what way the HAM model is suitable? So in what are the problems in HAM model? To write, you should know about the plot of HAM. Then when you are asked to write about HAM, you should be in a position to compare the HAM with VGF. When you compare the HAM with the BOT annuity, different doors will open, different perspective you can write. So I have given you entire plot. This is the one way I'm pitching. Then you apply the logic of operation, maintenance, then design, build, finance, construct, ownership. So you got a multiple template of points which you can pitch in. You can write based on the cross-examining the two projects, two model, anything you can write. The one thing is the current affairs, what you read, recent initiatives, that you should be aware of. Then you can write any type of question. Okay. Is it clear, students? So have you all copied? Clear. Okay. Now we can only this thing writing part. Okay. So hardly 10 more minutes. Okay. So I could be able to finish. Now, okay. Have you all written, students? I'm going to erase. Okay. Now let's go back. So now look here. EPC means all three by the government. Government is understanding. Here all by private. That's all. So it's more risky to the government, more risky to the private. This understanding you should have. But BOT annuity, you are trying to lessen the risk by letting the government to take the revenue risk. But VGF, you are trying to lessen the risk by letting the government to take the investment risk, but not the entire. But in HAM, you are trying to lessen the risk in both the area, both spheres, here and here. Okay, so in what way is given in the slide? Okay, you can let's go to the slide, students. Okay, so these are models, BGF HAM. Now we write BOT model, already we have written. We have written enough about BOT model. Okay, so one thing, notes over. BOT already you have written. Second one, EPC, right? The EPC, engineering procurement model, no? So it is nothing but design build, design build. You are bringing the engineering expertise of the private player. On slides you have to copy, students. Okay, with that, okay, we could be able to finish our class. It is a traditional project type. Point number one. Now you are very clear with all the things. Just you do the job of writing. Entire project is funded by the government. Government invites bids for engineering knowledge from the private players. Then all clearances by the government. That's all. This is about EPC. Okay, so this is about EPC model. So BOT we have done, EPC we have done. Next one is BGF, viability gap funding. Okay, students. Next one is VGF. So the class will start at 7, students. I have made a phone call and I informed. Okay. So 6:45 I will finish. Then you can have the break. Then the class will start at 7. Viability gap funding. So here the same thing. 30% of the cost of the project can be assessed in the form of a grant. So if it is a 100 crore project, 30 crore is given as a free money by the government. So government is taking care of this area. So revenue risk, they will transfer to the private player. So in BOT annuity, some risk you reduce. VGF, a different type of risk you reduce. But in HAM, two types of risk you are trying to reduce. So this is the cross examination. Critically examine what way HAM model is beneficial than VGF. In what way HAM is better than BOT model, BOT annuity. So all the things, okay, you can write in this way. Now HAM model, last one, HAM, hybrid annuity model. So as I told you, we know about EPC students and then we know about the BOT annuity. It's a club. Okay, it's a clubbing of the two models, and then the output is HAM. What is EPC? You all know. What is BOT annuity? You all know. Now we can write we got 2 slides for hybrid annuity. It's a mix of BOT annuity and EPC model. As per the design, government will contribute 40% of the project cost in the first 5 years through annual payments. Which means here, unlike the VGF, government will not release the entire money in one stroke. 40% is released by the government in installments. Balance 60% is raised by the developer. Then this 60% what happens is given in the next slide. This money will also be returning back to the private players based on his efficiency. Fixed amount will be given, or some performance based perks or increase will be given by the government. Okay, with the last slide, we'll be finishing this model. Then we got some challenges, and then we got some limitations, and then some initiatives of the government. Okay, we will be having 5 slides pending. Okay, now I think the overall idea is clear. Okay, is it clear? Now, definitely, this note, students, kindly revise, because it's a more technical thing. So if you don't revise, entire thing you'll forget after 1 week time. Okay, everything will look newly to you. Okay, so definitely, okay, so you spent some your valuable 1.5 to 2 hours time. Okay, so kindly revise the notes. Okay, now this slide is over. Now next one. Hybrid annuity means the first 40% payment is made as a fixed amount in 5 equal installments. So this is not right, students. This already we written given in the previous slide. You can write from here. Whereas the remaining 60% is paid as variable annuity amount after the completion of the project, depending upon the class or depending upon the value of assets. Your doubts would have got addressed. The doubts which are not addressed, okay, you can come back at the end. You can send me the doubts once again, which I'll clarify. Okay. So it's a clear, students. Now we learned about EPC. Okay, we have learned about BOT, and then we have learned about BOT annuity, and then we have learned about BGF, and then we have learned about the HAM model. Okay. Then apart from that, we learned about the service contract, management contract, lease contract, concession contract, then BOT contract, then the types within all the types we covered. Okay. Now, what are the limitations? What are the government initiatives? With that, we're going to finish. Okay. Because exam angle, these things will be given. What are the advantages of the PPP model? What are the limitations of the model? Okay, so when you ask to write, you should be able to write. Okay, what are the points? Now, advantages. So in the mains perspective, we're going to write some advantages of PPP. So the point number 1, in PPP, there is a clear segregation of role, because government is the supervisor, private is the builder. But in a normal, all the government project, government is the builder, government is the supervisor, which means I am supervising my own activity. Which I won't be okay. So doing it in a more efficient way. Okay, so that is not the right way to supervise. But in PPP, privates are building, government is supervising. So we have got the clear segregation, which will lead to more accountability. Okay, which will lead to more efficiency, which will lead to more transparency. So that is the second point. Then here you are able to access the private sector finance. Privates, they are sponsoring. So this actually, when the privates are putting their capital, definitely they will be showing their efficiency or technology expertise. Then same way, when the privates are contributing the capital, government can utilize the funds for other areas, which means other social infrastructure where the privates will not show interest. It's a common, students. Okay, the common advantages I have given. So here the one is, here the government is monitoring the project of the private, but normal project, government is the supervisor, government will monitor its own activity. It's not the right approach. But here there is segregation or division of role, leads to transparency. Privates are putting their money, so the government can use the money for other projects. And then when they put the money, the privates, just for the reason of earning more, they bring their more technology or bring their more efficiency, show their efficiency. These are the points. Then what are the constraints we have? What are the limitations? In PPP, what are the constraints we have? We all know it is made up of more legal formalities. It requires more clearances, procedural hurdles. It's a complex process involved, and then more cost involved with the project, and then long duration of the project. Okay, these are the things we're going to learn. Limitations of PPPs. Limitation of PPP. What are the limitations? Complex process, high transaction cost, then enforcing and monitoring is a tedious process. Is a technically very difficult. Framing the project, and then implementing them. Even the authority change, it should be implemented in the same way. Then obsolescing bargain. What is the meaning of the word obsolescing bargain? The long period of the PPP projects makes the builder of the project, he loses his voice, or because because it's a 20-year project. Okay, now we are in 2021. When the project ends on 2041, at the time the builder may not be having the same bargaining capacity. At the time the political climate may be different, administrative climate may be different. Okay, so in this angle, okay, the bargaining capabilities of the private, it gets affected because of the long nature of project. That's all, students. Okay, now the last thing is government initiatives. I have given some 3 initiatives that you can write or need not write, because that is a current affair. Okay, that you can, that recently in the budget also government made some announcement like that. What you read in economic survey and paper, that you can attach. That's all. Okay, with that we're finishing. Okay, so complex process, transaction cost, monitoring, obsolescing bargain. Then government incentives for PPP. I given only 3, but we got plenty that you can write. First one is the foreign direct investment, 100%, which means earlier, I think Nila, you asked, okay, whether it's a foreign people are permitted. Okay, it's 100%, it's permitted. Okay, foreign direct investment up to 100%. That's all, students. With the 2 more slides, I'll be finishing my class. Okay, so exactly by 6:46, I'll be completing. Then the students, those who don't have doubts, you can just go for a 15 minutes break. So I think sir will start the class by 7 o'clock. Prashant sir, சொல்லிருங்கப்பா. Okay, so one is the foreign direct investment in equity of special purpose vehicles. So regarding this segment, student, is the segment which may be asked in the mains regarding initiatives, which you can easily do with the help of the reading what you do in the paper and economic survey. Okay, that's a more dynamic in nature. But remaining things, students, okay, that is the thing which I have collected from the many areas, different areas. I compiled the content, so which is a one-stop reference for your entire PPP needs. Next one is the second one. Second one, India infrastructure project development. Project development, which means it provides some technical support in structuring the project, because it's more technical and complex in nature. So the support is given by the government. India Infrastructure Project Development Fund we have constituted to give support for these projects. Then the last slide. Okay, the next one is the last slide. Okay, so with this we are finishing our general economics. Okay, so the last slide, the next slide. That's all. Okay, so this is the last slide, students. India Infrastructure Finance Company Limited, long-term debt for financing infrastructure project. They do the refinancing, which means transfer of loans from the company. Then they can get the funds released. They can use it for another new projects. Refinance to banks and institutions for loans granted by them to infrastructure companies. If there is an existing loan, they will take it from them. So they will be released their burden. They can use it for any other new finances. So like that, we have got many more initiatives. Kindly refer economic survey and paper to have more understanding. So all the technical things we have covered, students. So whatever required for our examination, both in prelims, especially in mains perspective, what is a PPP model? What are the different issues we have in infrastructure financing? Then about the PPP, we learned about different 5 models: service, management, lease, contract, concession, BOT. Then we learned about each and every type. Then we learned about the VGF model, HAM model, EPC model, BOT annuity. Then we learned about the limitations. Then we learned about the advantages. Then last we are learning about the initiatives. Okay, with this we are completing our general economics as well as our investment models. Now the students, those who are not sent any message, those who don't have any doubts, we can sign out. We can take a break. You can assemble back at 7 o'clock for your social issues class. Okay, society class. Those who have doubts, we can stay back and then you can send me your doubts. Because okay, now most of your doubts may would have got clarified. Okay, those who are still in pending nature, you can send me again. Okay, Okay, Prashant, okay, thank you, Prashant. Okay, my mail ID now, students, you can take my mail ID. Okay, mail ID is everything is small letter. Okay, for your okay understanding, I'm writing in the capital letter. Okay, manikandan.sr 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 at Shankar IAS .in. Okay, so the doubts you can send to okay, in this mail ID. Okay, for example, writing the mains answer, how to write mains answers. Okay, whether I'm writing the right way, these things and all. You can get your support because now the class gets over, and then our support will continue to you students. Okay, till you reach your dream. Okay, so till achieve your goal. So each and every faculty will provide our support to you. So to reach me, you can use this mail ID. Everything small. So for visibility, I have written in caps. Okay, students. With this, I'm finishing. Those who got doubts alone, you can send the doubts again because most of the doubts, if I start answering, the doubts would have got clarified in the meantime and the class progress. Okay. Now I want to look at your doubts. Those who don't have doubts, you can sign out, students. You can go and attend. You can take a break and you can attend your 7 o'clock session. Okay. Okay. Now what are the doubts? Vibrant bond market. Do people fear default to yes? Okay. That is the thing. Okay. Because in a PPP model, okay, the concept is when you don't have the vibrant bond market, people will normally hesitate. Okay. Yes, the Vista is one example for the PPP also. Can we use Mishra and Puri? Yes, Mishra and Puri you can use. Datan Sundaram you can use. Uma Kapila you can use. But the thing is, Uma Kapila is more than enough. General economics students, Uma Kapila, and then you can read the paper. Paper is more important, more enough for general economics. You do not trouble yourself with the more books. For core economics, so you may refer NCRT and then the institute material and Shankar Ganesh. Some people may be referring Ramesh Singh. For general economics, very simple. Economics survey, class notes, then paper. More than enough. Uma Kapila, I read it for mains. Okay, that's more than enough. Just when you have a look at the previous year question, you'll understand that. After this lockdown is over, can we meet? Yes, students. Okay, definitely. Okay. So our institute, the very plus point of our institute is always not only okay me. Each and every faculty will be more approachable. Okay, because moreover, you all miss that opportunity, students, because whenever you want to get any doubts clarified, you can come to institute. Okay, so not only by this, okay, even if batch ends after 1 year, after 2 years, okay, for example, okay, because sometimes okay, you may after preparation, some students, okay, because of their job, they may not give attempt, they may go abroad, then once again they may come for preparation. So here the support what we provide till you reach your dream, our support will continue, which means until you clear your interview, so you can come and get your doubts clear in person or mail ID. Okay, so all the thing. Okay, and then you'll be having the test series, all the things we can make use of. So all the faculties will be clearing your doubts. So this now the thing is temporarily the class. Okay, we are going to have a break, which means the GS class. Okay, the brainstorming all session. And each and every one, we got any doubts once the lockdown, everything gets over. So we got any doubts with any faculty, you can come to the office. So if all faculty will be available, okay, you can contact them, you can get the doubts clarified. Okay. Then apart from that, you're not able to reach the faculty, you can use the mail ID, you can contact them, okay, regarding the structuring answer writing. Okay. So wish you all the best, students. Okay, thank you all. So I think I'll be get a chance to meeting all in the farewell session. Okay, for the farewell for your batch. Okay, at the time let's all meet. Thank you. Wish you all the best. Now, okay, so I am going to look at the messages. Thank you, students. Thank you, Karthi. Thank you, Chandramohan. Thank you, Amshi. Chandramohan, okay, you're very energetic throughout the class, sending messages. Okay, so only even I felt tired, but I think you didn't feel tired. Okay, keep that energy. Each and everyone. Okay, Helen, Nilajyoti. Okay, always kept the video signed on. Okay, so it gave the classroom atmosphere. Everyone. Okay, all the students. Okay, and then all the students. Monica, Radhakrishnan. Wish you all the best. Okay, so now I think because of the lack of time, I am rushing. Okay, I'm going like express. Okay, so I don't have the time. Okay, so now you just have the mail ID, students. The doubts which are unaddressed by me, okay, which are left unaddressed by me, okay, you can just post it again also. And then Lalit, concession contract, very simple, Lalit. It is a type of BOT contract which you apply in the only for the brownfield model, not for the greenfield project. Okay, there is a concession. Then you apply the same thing. Okay, so which I told now, concession means ownership will not be given. All the other things, design, build, finance, so everything will be given. Okay, that is regarding the concession contract. Nikita, thank you. And then okay, Akhilesh, thank you. Vignesh, thank you. Thank you for all your complimentary messages. Asha, thank you. And then one more student, Adayar, your name is not here. Thank you, Jaydev, Sindhya. One good thing is Yes, okay, summarizing. But today I think I didn't do the summarize. Okay, but anyway, thank you. Okay, very nice of your messages. And then we'll meet you all. Okay, in the session. Economic survey class, I think that you have to ask with Chandru sir, okay, because he's the right person to, because you contact Shruti, okay, because she could give you the exact reply, or else I will check with Chandru sir and I'll let you know, okay, regarding economic survey. So whether you'll be having the offline class or any, not offline, online class, or any material alone will be given, okay, that you can know. So regarding Soundarya, thank you. And then, okay, thank you students for all your messages. So now I think you got time constraint, and every students, okay, take care message, thank you. And each and everyone, okay, now you know that we are living in a kind of situation, okay, where we are not able to live freely, okay. So the thing is, but say, okay, be safe, same time be focused, don't worry about other things, okay. So two things we should have. One is we should be very careful. At the same time, we should be very strong. We should not have any fear, okay. Without fear, okay, with all precautions we approach. I wish you all the best for your examinations, okay. Thank you, students. Okay, I'm signing out. Bye, you all.
Sir, am I
And then
audible,
any
sir?
other doubts? Ham is a hybrid of VGF and not annuity.
Am I
Ham
audible,
is a
sir?
hybrid of VGF. No, you may think like that, okay? It's because VGF only we have, but technically the people say it's a BOT annuity, and then okay, it's the annuity model, and then we have the EPC. Two things, because in the BOT annuity we have the revenue coming, and then you may think like because in EPC also we are putting the government now. Not only VGF, we are sharing the burden. EPC entire burden is on the government. You look in that perspective. Otherwise, you'll think it is only a VGF part. You may think like that. But what you think is also logically right. But EPC also entire part is shared by the government. So that's why we are saying it is a mix of EPC and BOT annuity. Paul, you are calling in the audio. Yes. Okay. Proceed,
Yes,
Paul.
am I audible, sir?
Prashant, Paul, unmute pannunga. And then Cynthia also, you try to unmute. No. Okay. You can also proceed. Prashant,
Sir,
you
am
can
I audible?
unmute Nilar Jyoti.
Sir, am I audible?
Am I audible? Prashant, Nilar Jyoti Paul, unmute pannunga.
Sir,
Paul,
am I
you speak.
audible?
No, you are not audible, Paul. Prashant, Paul, unmute pannunga. Prashant, are you there?
Hello, sir. Am I audible, sir? Am I audible?
Please, no, I'm not able to hear.
Okay, sir.
Sorry.
I will type
I
my
have to keep
questions.
put my earphone. It's my mistake.
Sir, am I audible, sir?
You are audible.
Yes, sir. Sir, my question is sometimes we see that Indian government company sometimes collaborate with the foreign government's company, like Bromo in the BrahMos. They collaborate with the Rosgorodnadskor export of Russia. Is it PPP model or something different?
When the government is combining with the government, it is a public. It is not a private. But when an Indian private company is combining with the foreign government, it is the PPP. Clear? There should be one public stakeholder. There should be one private stakeholder. Is it clear? Fine. Okay, fine. Okay, students, I think, okay, now, did you show any slide on BOT and BOT annuity model? No, but BOT, we have learned, no, in a stretch, we have learned about BOT in all ways. So BOT, I told you about BOT based on operation maintenance, then based on design, how it varies, then based on the build finance. So I have not given any separate notes because you have got a bunch of content for the BOT. Annuity, the only thing is the revenue risk is on the government. That's all. Okay. Okay, I think I have answered all your doubts, students. Now I think sir may be waiting, so I think it's not right to continue the class. And then Cynthia, I think you raised your hand. I asked you to ask her down. Have you got your doubt pending, or is it over? Over means you can send the message. It's fine. It's fine. You want, okay, ask. You proceed. Yes, you raise your hand. Ask Cynthia.
Can you hear me, sir?
Yes, I can hear you.
Sir, you said that we need to materialize this things, right? Investment obligations of these things, isn't it? Asset liability mismatch should be made more materialized kind of thing. So would that mean that we have to make this stock market kind of an ecosystem for all this?
Yes.
Would that
Actually,
mean?
yes. Actually, we have the ecosystem. For example, we have the financial market. We have the bonds like elephant bonds. We have the bonds like Maharaja bonds. We have bonds like green bonds. But the investors, they should have the confidence. They should have the trust on those securities. When you don't have the trust, when you always associate risk or low returns with those securities, the people may not be able to generate resources. So we have the platform. It is up to the investors to understand the platform and then to trust them and then to go ahead with the investments. That's all.
Okay.
It does not mean
Okay.
that we have to take any special steps. The platform is there. It is not that much vibrant, which means, yeah, unlike the bank ecosystem, unlike the other government security market, okay, we are not having that much trust and confidence on those securities. So the people, they are trying it difficult to generate the funds from the market. That's the point.
That is the one stopping,
Yes, yes.
isn't it? Okay.
Is it
And
clear?
one another thing is like you will be calling concession as also bought concession, and
Hmm.
bought is otherwise a contract too.
Oh,
So
no, no.
can we
Actually,
do that? So
no, thing is, Cynthia, one is we have the 5 different types. So we have the concessions, means it is the privileges what we are giving. But we have a type of contract which is called as a concession or BOT concession. Why we say means because BOT we use it for greenfield projects, but
correct.
BOT concession we apply only in the brownfield project. So, but actually, in a common sense, concession means it is a privileges offered by the government to the public to the private entity. But when the concessions are bundled or packed as a type of contract which has got certain type of fundamental nature, we call them as a concession contract. Example, in concession contract, the operation maintenance will be given to the private, design will be by the private, construction by the private, finance by the private. But even in a
Okay.
service contract, some concession will be given to the private. That is a normal concession. Okay, that is a term what we are using. But here it is broader in nature. Scope is broad. Is it
Got
clear?
it.
Yes.
Yeah, yeah. Thanks, sir.
Okay, Cynthia. Thank
I'm
you. Thank
done.
you.
Thank
Thank
you
you.
so much,
Thank you.
sir.
Thank you. Thank you, students. Okay, students. Now I don't have the luxury of attending all your doubts. I think sir may be waiting. I'm not sure about it. Okay, students. Thank you all. Thank you. Thank you. Thank you. Thank you, students. Signing out. Okay. Thank you, Cynthia. Thank you, students. Thank you, everyone. Fine. I'm signing out, students. Okay.